Boom! What's going on, Investomaniacs? Your boy Knight Rider here, and today we've got your Robinhood stock market update. Up first, we've got data showing Amazon ships almost half of its packages itself. When you track every Amazon package for 2.5 years, you learn juicy details. Data-obsessed company Rakuten found the percent of Amazon packages delivered by Amazon itself rose from 16% in 2017 to 48% today, just 2.5 years later. The U.S. Postal Service ships 33%, UPS has 17%, and FedEx covers under 2%. And as some of you will already know, Amazon's relationship with FedEx has ended, so that will now be 0. All of Amazon's gains over that span were at the expense of the Postal Service, just as Trump was demanding Amazon pay more for mail. How'd it happen so fast? A combination of strategic, under-the-radar, and high-profile shipping fleets. Amazon Flex. This lets gig workers deliver packages in their own little Honda Civic, delivery coupe a la kind of Uber Lyft style, making $18 to $25 an hour. Amazon Delivery Partners. Amazon entices local entrepreneurs to start micro-delivery companies to handle last-mile delivery of packages to stoops across their hometowns. Amazon Now, those Amazon-branded vans that can deliver to a bar within an hour. Amazon Locker and Amazon Counter deliver a bunch of things to one spot, like a student center or a Rite Aid. Hey, that partnership was just announced yesterday. And that lets customers carry their stuff home from that central location. Also, planes. Amazon just leased 15 additional planes at the Paris Air Show, as well as drones that are arriving within months, although we've been told that before, and a $1.5 billion air hub in Kentucky. The takeaway: let the competition give you the data, then you beat them with it. Amazon's relationship with a bunch of partners has shifted from friends to frenemies to enemies. It partnered up with them at first, but eventually used that partnership data to do it better themselves. Amazon's done this with physical stores like Amazon Go, and even video with Amazon Original Films. And according to Rakuten, Amazon delivered packages take only 3.2 days on average. Everyone else takes 6. AMD is loving Bitcoin Mania Part 2. Bitcoin is having another moment. The price of the OG cryptocurrency rose from under $4,000 in March to over $13,000 this week here in June, but did fall to $10,000 on Thursday. As the price surges, so does incentive to mine Bitcoin. New coins generated by people crunching numbers on high-powered, energy-devouring computers. That just gives AMD Advanced Micro Devices another something to smile about. AMD's stock has doubled over the past year, and computer chips that it's become famous for are getting love from diverse places. Microsoft, the tech company, is reportedly considering swapping out of Intel chips for AMD ones in its next litter of Surface tablets. Video games. The PlayStation 5 and the next Xbox are both contracted to use AMD chips. Bitcoin. These miners want AMD in their Bitcoin digging computers. If the price of Bitcoin stays up, it may boost sales of AMD processors from techies who want to turn newly minted Bitcoin into cash. The takeaway: AMD is the shovel to Bitcoin's gold. Like the gold rush that spurred demand for literal shovels back in California, the second Bitcoin boom is hungry for AMD chips. And guys, remember, who ultimately got rich in that original, genuine gold rush? It wasn't necessarily the people mining for gold. The first millionaire in the state of California was the guy selling shovels to people mining the gold. So I like this idea of investing in AMD in place of Bitcoin if you want to invest in the Bitcoin space. Anyway, back in November, when Bitcoin hype was hibernating, AMD unveiled a bunch of services for Bitcoin miners and blockchain developers. That bet could be paying off now. The designer of the iPhone, Johnny Ive, just left Apple. Chief Design Officer, apologies, make that Sir Chief Design Officer, British-born and fully knighted Johnny Ive is leaving Apple after 27 years to start his own design company. Apple assured us in its press release that Johnny Ive will keep working with Apple. Shares only dipped 1% after the news because it will be one of his first clients. But then again, if Apple's like a $900 billion company, then a 1% dip is $9 billion. So good for Johnny Ive. I guess people think he's worth $9 billion. That's an awful lot of money, but obviously he has been instrumental to Apple. Something that you're touching today was probably touched by Ive and his commitment to less is more. When Jobs returned to Apple in 1997, the company was just clicks away from bankruptcy. That's when Johnny became Apple's spirit animal by designing these masterpiece devices. The iMac desktop in 1998, the OG Starburst colored ones that took over your school's computer lab. He also did more recent MacBook Airs. The 2001 iPod, that circular scrolling was a game changer. He also did the adorable iPod mini. The 2007 iPhone, Apple's greatest commercial success. He also led the teams on the iPad and the AirPods. Apple's neo-futurist campus in 2017. Ive stepped away from product innovations to design the spaceship-ish new Apple HQ building. That thing looks super cool. The takeaway: Apple needs to schedule a Genius Bar appointment for itself. 2019 has been a rough year, and shares are only up 8% over the last year. But hey, 8% is still pretty good. It's just not as good as a lot of kind of similar type companies. Slowing iPhone sales and the trade war with key manufacturing partner China have been a problem. The departure of its Apple Store retail chief and now its chief designer won't help. Hope you guys had a great day. I appreciate the likes, comments, and subs. Have a good one.